and in motion. Got it. We are going. Right, looks like everyone's here who's going to be here. Let me just remember to pop the YouTube on mute. So just give me a second and then we'll dive right in. Fabulous. Okay, so we are rocking, we are rolling, we are live everywhere we're supposed to be. We've got a room full of wonderful people. Thank you for taking some time out of your day. The chat is active. Great. Good morning, Glenn. Thank you very much. And if you are watching this on the YouTube, the chat should be live there. If you've got a question, comment, if you've got a stock that you want to review, pop the ticker in the chat box. And again, I've got them both open on the t'other monitor. Morning, Randy. Morning. Just checking everything's going. Okay, perfect. Okay, so we're live, we're rocking and rolling. Everything's in the green. Let's get into it. So welcome one, welcome all. Can't believe it's Friday again. Non-farm payrolls. I don't normally have a little look at the news. I don't honestly care one way or the other what happens, but this one seems quite important from everyone's point of view. Just because it was going to suggest that we're either going to see more belt tightening or everything that's going on with the Fed and fiscal policies is working the way it's supposed to work. So we've seen this huge reaction. And I don't often comment on these things, as you know, and you normally don't just care one way or the other. But it does have, or it has had, certainly a larger than normal intraday movement, which from the swing trades point of view that we've got is bearish, it's downwards, and is only benefiting our situation. Anyway, with that said, let's get into it. So we are going to be focusing on swing trading the markets. We're looking to capture the main move of the day, the week, the month, the quarter, you know, something for everyone, regardless of your flavor. So if you're looking for things about the stock market, then you are in exactly the right place. So my whole philosophy these days is that trading should be simple and it should work not just for me, but for you as well. It needs to be replicatable. So one of the things that I try to do in these sessions is to give you the right tools, the rules, software to assist you, be a community to support you, and if you'll allow me to be, a mentor to show you the right way so that you can get real results now in the fastest and smartest possible way. For anyone who's been following me for any length of time, you'll know this to be true. So if you are new, take a leap of faith and start following the process. One of the misconceptions that we all hear is BTFD, buy the dip. It doesn't necessarily mean what you think it means. And this is one of the things that I'm trying to demystify. I see so many people on the various forums. Again, you've only got to go to Wall Street Bets and just literally search loss porn. And there's people bragging about losing 30, 50, 80, $100,000 on one trade because they're buying what they think is a dip. And all we need to do, which is what I'm going to demonstrate to you right now, is we need to add a qualifier. We need to add in the context of a trend, because if there's no trend, there's no dip, and people are buying sell-offs in a downtrend, and it's costing them, in some cases, life-changing amounts of money. And it's just sheer insanity. The other thing that it's easy to fall into the trap of doing is to sit quite literally at the desk, flicking for hours and hours through chart after chart after chart, like a mindless zombie. We've all done it, and it's a waste of time. It's useless. I'm going to demystify that for you again today, and we can zero in on the best stocks, the best opportunities at the right moment, at the right time, at the click of a button. Again, that's no exaggeration. I'm going to demonstrate that to you right now. And the bottom line is if you're ever asking yourself a question, where's the trade, then something's gone wrong. If you no points does myself or any of my traders ask themselves, where's the trade? It's binary. It either is or isn't present. So that's what I aim to do. I want to stop us from all asking questions. And when you've got a systematic rule-based approach, I refer to what I do as a production line. We're moving the raw materials, the potential trading opportunities along that production line, 1 step, 2 step, 3 steps at a time, and then we place the trade. It's a natural conclusion to get this completed experience. But if you're ever wondering, Like, what am I doing? What shall I do? Where's the trade? Where's my entry, my exit, my stops, my targets? If you're ever asking these questions, you're doing it wrong. The solution's simple. You need to define and refine what you're doing in more detail. So I want to turn the question into a statement. I want to go, there's the trade. I'm going to show you how I do that. Put your teeth in, Phil. I'm going to show you how I do it. I'm going to show you my number one money-making pattern. Again, I refer to what I do as production line trading. I refer to it like that for a reason. It should be like a factory. You've got your raw materials, the top 25 stocks that we think are the best opportunities. And we're just waiting for, okay, this one is, I can move that along to the next stage of the production line. And then I can move it along to the next stage and place the trade. There's 3 stages to this production line. So that's what I mean by it should be like a production line. It should be like a factory. And, very grateful to have discovered this. It took a long time to get here, but it's really mechanical. It's really rule-based. I'm going to explain my rules. So if you're new, strap in, pen and paper, pencil and paper to hand, and I'm going to go through what I'm doing. There is a family of strategies. The core strategy is swing trading stocks. It's predominantly what I'm doing. I typically use stock options as an alternative to trading stock. It's more capital efficient. And it means that we can have a portfolio of opportunities. We've also got short-term swing trading, basically using 60-minute charts. We can speed that production line up. So instead of getting paid at the end of the month with the main swing trading strategy, we can get paid at the end of the week or the end of the fortnight. Around about 7 to 10 days is what we'd expect to be typical on average. I've got to emphasize that on average. Sometimes it's more, sometimes it's less. We've also got this strategy. I've got to admit, I'm super pleased with this strategy. This is one of the original strategies that I started out trading, the one trade a day. The aim of this, and this is on the S&P futures, is to capture the main move of the day. And it sounds like we're doing a lot here, but the reality is I want to be able to check in, spend 10, 20 minutes seeing if there's an opportunity, and then check out, and then come back at the end of the day. It's not time intensive. I don't plan on being sat at the computer, but we should be able to check in, check for trades, and check out. And that is the essence of all the strategies that I do. There is, again, one more. Again, you can day trade with the similar philosophies, not exactly the same, but similar philosophies. The lower the time frame, there's a few more steps in that production line because there's a lot more noise on the lower time frames. So you can capture the main move of the morning with a day trade version of this strategy. And hey, if you want to trade consolidations, guess what? We've got you covered. There's a 4-in-1 pattern. I spent 12 years just trading consolidations, and we've got a mechanical, rule-based approach to profit quite literally from any market condition. And it should be time efficient. Again, please understand, it sounds like we're doing a lot, but it is, as you'll see in a moment, we are just quite literally checking in, checking for trades, managing them, and then moving on. It should take, when you learn the process, it's about 20 minutes as an absolute minimum. And when you're brand new, there's going to be a little bit of extra time. It should take you 30 to 60 minute maximum. And there's going to be days where it's clear there's nothing to do. So like yesterday for me, there was nothing to do. So it was check in, check for trades. It's a 2-minute day. Great, come back tomorrow. So that's the process that I want to do. And I want it for me first. Selfishly, it's always for me first. I want to be able to have some free time. For those who are brand new, I've got Crohn's disease. That's why this philosophy came about, where I don't have the energy. I can't work a 9 to 5 like most people, just because of my health situation. Way back in the early noughties was quite poor. So I wanted to have this flexibility to be able to do what I practice, what I preach: check in, check for trades, check out. And back then it was go and have a snooze, go to sleep. My energy levels were all over the place. As it turns out, the byproduct of that is that you get to do what I do around life commitments, other things. I get to do these open house sessions and try and give back to the trader community because, again, I have been quite fortunate to have figured a few things out. On that same note, I have a small announcement. Last 2 weeks ago, I released my solo podcast. So if you are into such things, they are short form podcasts. All you need to do is search AntiVestor in your favorite podcast player, and it will show up. And again, you'll be able to see it's just like that. It's bright red and blue, and you can listen to that. Again, I'm aiming for twice a week, so I'm just getting into a format. But if you like such things, it's there for you. New feature on these open houses. If you want to hop on the phone, you want to have a chat, you've got a question, you've got a view on the news, you've got you've got a question, just know that you've got a forum where we're trying to create a community. So if you're on the Zoom, this won't be available on the YouTube. Again, I can see a few people watching there, but if you are on the Zoom party that we've got going here, then you can hop on the phone, ask a question, have a view on the news. If you want to share something with the community, please feel free to. We're just trying to make it more open and accessible and fun environment, because obviously that's what's the point of doing it if we're not having fun. So before we get into the charts, if you are new, my name's Phil Newton, a guy with a weird accent that sounds like one of the Beatles. I am from the same place, Liverpool in the UK. I like cake, coffee, long walks, a strange thing for flamingos. We've all got a crazy thing, and that is mine. I do talk super fast, so you're just going to have to think a little bit faster to keep up with me. I've been trading since the mid-90s. I started out hand-drawing charts of all things when I was 15 years old, and it's just been an early passion for me. And now I get the chance to help great people like you. I would like to underscore that I am not a Wall Street guru. I'm just a regular guy who found some success. I sometimes say that I'm just a poor farm boy who figured a few things out, because that is as close to the truth as we're going to get. More importantly, I'm not regulated. Past performance is no guarantee of future performance. That's the legal part. What I can demonstrate is that it does sing from the same song sheet. We can look for footprints and clues, and history does repeat itself, not just in the financial markets, but throughout the ages. Similar things happen and repeat themselves over and over again. And if you think about what we're doing in the markets, we are not necessarily trading stocks, but we're trading human behavior, and human psychology hasn't changed in quite literally hundreds, if not thousands of years. So we're looking at the behavior, or a graphical representation of crowd psychology. And again, that's not changed. It means we can track and monitor it, and profit from it. Again, it has worked for quite some time. Again, I get my own results. Again, that is all fine and dandy. Typically, I post what I'm doing in real time most of the time. If you follow me on the email or on the socials, or you're in my Slack community, you'll see me talking about the stocks that I'm trading, again, in real time. I don't charge for a newsletter anymore. I used to do it for several years. But it's just out there. And again, when you know the secret of trading, you won't need newsletter, you won't need an alert system. So I'd rather teach you how to fish than to feed you for a meal. As I mentioned earlier, I do work occasionally with a small group of traders. So there is, some commercial intent. It's invitation. I'm not forcing you to do anything. But if you would like to work more closely with me and speed up your own learning curve, you can apply. Again, what I do isn't for everyone, and I don't work with everyone. But what I do get results, and that is the thing that I am proud of. It's not because it's me saying it. My students tell me that they get results on a regular, daily, consistent basis. And just consider yourself, or consider for yourself, that whatever you're doing right now, if it's not working, stop doing it. It's not working. I'll say it again, stop doing it. So you've got to make change to see change. So if you're doing something that's not working the way you expect it to, maybe it's not the right system for you. And the way that I like to illustrate this is that day trading works. I spent 12 years as a day trader. It's not that it's the best way to trade. It's the only way to trade. But it might not be right for you. And if you don't have time to day trade, it doesn't make sense to learn how to day trade. It sounds like an obvious thing, but it's not critical. It's not mission critical. Again, you can do it. It's an optional extra with the way that I trade. But I don't want to trade at the end of the day most times. Again, I want to have it time free. I don't want to be sat at the computer all day. And for me, day trading means I've got to sit there for, a couple of hours. And I don't really want to do that. But if you do, it is available to you. But if you don't have the time to day trade, which is the point, then why learn how to day trade? So the best way of thinking about what is the right strategy for you is, firstly, think about what time do you have available? And you'll notice that I'm not saying how much money do you want to make, because money is a byproduct of process. And all the strategies, all the systems, they all work some of the time. But if you can't follow that process around your regular day-to-day, your life, your commitments, then there's no point learning that system. So think about what times you have available. What do you want from trading? Again, money's not the outcome. Money's a byproduct of process. So if you want to sit there with your feet up, pipe smoking, reading the newspaper, plenty of free time because you're not having to stare at the charts, then maybe what I do might be worth consideration. So that's my unabashed presentation for the slide parts of the invitation. Again, what I do gets results. Now, before we dive into the charts, I'm going to spend 2 minutes on a thought I was having yesterday. I've had this, or I've explained this to many people previously, and one of the misconceptions of trading, and there's just a few more slides here, so just bear with me. One of the misconceptions of trading is that it's 50-50. Most people would think the stock or the chart or the market, it's either going to go up or down, 50-50. Oh, quick drink. I'm on a fruit juice today. I'm trying to decaffeinate myself. I always drink too much coffee. So I'm on a coffee-free day, and I'm still as hyper as normal. So trading is 50-50. It's a misconception. You're either going to go up or down. The reality is, oh, sorry, there you go. So it's two choices. Most traders assume that incorrectly we have a 50-50 outcome. It's either up or down, it's right or wrong, and it's binary. You've got two choices. The reality is that there are three possible outcomes: up, down, and the market can actually no change. Now, what we could also do is define, the market's always in flux, in fairness, but we could consider that the no change is a consolidation, a narrow band of small price movements. So that's what I would define as no change in the stock market world. But the reality is there's three choices: up, down, and it stays around about the same level. Again, it's always in flux, but it's going to be around about the same. And that means that it's a 33.33333 recurring outcome. And that's the bit that people forget. It can go up, down, and no change. And similarly, just going back to this, we can be bullish, we can be bearish. And the key point here is not trading is a perfectly valid trading choice, not trading. In fact, let me just pop a slide on it. So we can be bullish. There we go. So we can be bullish, bearish, or we can be cash. Cash is king. Cash is a perfectly valid, no trade. Cash is a perfectly valid trading choice. And I think when you get used to, I think I'm going to bold that one. This is probably the most important trade you can place. Not placing a trade is the hardest thing to do, because as traders, we naturally want to trade. I certainly do. We all want to do. We all want to trade. We all want to profit from movements in the markets. But the reality is not every move is worth trading. And this week, certainly the last several days, the strategy that I use, the strategy that I teach, all of them have been relatively inactive. There's been very little activity for new trading opportunities. Despite the movements on Monday and Tuesday, there's been very little activity, and that's okay. So half the battle is recognizing that you're not missing out. If your system that you use, and this is what comes back to what I was saying earlier, if you've got a process, a strategy that you have defined to the nth degree, that is fully describing the entries, the exits, the stops, the targets, the when to do something, and more importantly, when not to take action. That's the hardest part to trade. That inaction is the one that's the one that will make you money. Again, I think I'm emphasizing this. I think everyone's in the chat box is kind of half agreeing with me. Absolutely. Patience is the hardest thing. And even no matter when you're day trading, swing trading, investing, whatever the process is, it's just knowing that if movement is happening in the stock or the commodity or the time, whatever the thing is that you're looking at, you're not missing anything if your system hasn't said, now's the time to take action. So with that said, let's go and look at where it is. There we go. Let's go and look at the system that I use. Let's go and look at nerd out on a few charts and show you the process or just one of them, actually, one of my 6 money-making patterns. Let's go and take a look at them. Let me minimize the charts. Thankfully, that's the last of the charts. Ta-da. Right. Let me just pop the watermark on. I always forget. I don't have the watermark on for myself. Just because I find it, I've got to admit, I find the watermark annoying. I also find candlesticks annoying at the moment. So I'd rather look at the bar charts. It makes no consequence whatsoever whether you use candles, whether you use bars. For me personally, I'm just trying to remove the color off the charts. I'm just finding them a little bit of distraction at the moment. So that's the only reason why I've got bar charts on. I've got no color on my chart, as you can see right there. It's intentionally black. Again, they could be any color for that matter. It makes no difference. Anyway, let's pop that bad boy full screen. So let me just scroll back a little bit. I'll go through the example. Let's go through the bullish example, and then we'll go through the bearish example. All these little arrows on the chart, this is the algorithm, the rules that I'm about to explain to you. We've defined them, and when I say we, it's the royal we, it's me. The rules have been defined to the point where they can, if this, then that. When this thing has happened, then do the next thing, and then do the next thing, and then place the trade or manage the trade, as the case may be. I'm going to explain the back of the envelope version so that you can see what's going on. But ultimately, it's an algorithm. Again, that's a fancy way of saying a set of rules. Another way of thinking about it, it sounds complex when we say algorithm, but if you think about it, something as simple as a cooking recipe is an algorithm, a list of rules to follow that gives you a desired outcome. And if you follow that process, the way it's described, you will get the meal that you want. So don't think about an algorithm as being something that is fancy and complex. It's just a simple set of rules to keep you on the straight and narrow. Similarly, a pilot has a pre-flight checklist before they take off. That's what we're going to do. We're going to look for a pre-trade checklist before we place the trade. So what are those rules? Number one. First thing I'm going to do is, actually back up slightly. I'm already ahead of myself. So I've got 3 lines here. I've got the 200, the 50, and the 20 period moving average. There is nothing magical about the moving averages. Nothing magical whatsoever. What they do allow me to do is they give me a mechanical frame of reference to assess where price is in relation to those moving averages. I'm also going to bias myself to the bullish or the bearish side by looking at the 50 and the 200. So that if the 50 is above the 200, I shall consider only looking for bullish trading opportunities. I will only be bullish. I'll be a buyer, essentially. And I will consider the trend as being up. Now, it's not an automatic buy indication. Please note the words that I'm using. There is no such thing as a buy signal. There's only an indication. So that is my bullish bias. The 50 is above the 200, the crossover, for want of a better description. And then I'm going to wait 20 days. When the first time that happens, I'm going to wait 20 days. And this is going to help me avoid the downside to using this indicator, is that it's lagging and it has a tendency from time to time to give false indications, false starts. Again, we only know that it's false with hindsight. So I'm going to wait 20 days. After those 20 days, it's game on. Every dip that happens is an opportunity to profit from the trend. So at this point, that's when I'm going to be saying that the trend is up. So I'm looking for that push away and a pullback into the moving averages. Now I'm just going to focus on the 50 and the 200 just for simplicity. There are 3 moving averages, but just looking at 2 moving averages, the 50 and the 200. When price comes back to the 50, I'm going to call that a dip. It means that I'm going to ignore every down day, every down movement until it touches at or is below the 50 period moving average. Now, let me just pause there. Is everyone happy with that concept? Find a trend, define the trend, 1, 2, 3 rules, and then look for a dip in the context of a trend. And we've defined the dip as being, it needs to be at or below the 50 period moving average. When that happens, we're going to call that a dip. It's still not an automatic buy indication, but that is what I'm going to define as the dip in the context of the trend. Because remember, we're trying to BTFD. So what we've done is we're going to buy the dip, and we can forget the F. We're going to buy the dip, but we're going to add in the trend. That's the bit that all the idiots on the internet forget. Buy the dip in the trend. You add that into the context, it suddenly becomes easier. We've defined what the trend is. We've defined what the dip is. So now we can look for all of those times where price is at or touches or below the 50 period moving average. When you have a trend, it's usually long lasting. It could last for 6, 8, 12, 24, and in some cases, several years. This last trend post, what have we got? The end of 2020, this last trend lasted almost a year and a half. There are plenty of opportunities to join the trend. You don't need to necessarily worry about the first part of the trend. You are, and this is what I said earlier, you're not missing out. You're never going to catch the bottom in this case. And equally, you're never going to catch the top of the move. But you can certainly profit from lots of bits in the middle. So what we're going to do is when price pushes away from the 50, 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 away, a wimbo way, outward. Should we break into song? Oh, it's funny. The move away from the 50 period moving average is the bit that we want to profit from. Now, I refer to the bit that moves away as a phase 3 trend, the profitable part of the move. When we see price dipping in my training, I refer to that as a phase 2 trend. So a dip worth buying. We found a dip. The dip is the phase 2. A dip worth buying is the phase 3. And we're looking to try and profit from the bit that pushes away and upwards. Is everyone happy with that? Does that make sense? Is there anyone unsure about what we've just described? Find the trend, define the dip, and profit from the rally. That's all we want to do. Does that make sense? So let me know in the chat box. Pop a comment in, pop a question if you're unsure. Happy to go over this as many times as necessary until you get it. But this is what it means to buy the dip, and not just buy any dip. Find a buyable dip in the context of a trend. And then when it's worth buying, then we participate. Now, I don't see any questions. I'm going to presume that everyone's fine with that. So the next part of this is bullshit, Phil. Does it really work? Is it really that simple? Well, I've got this wonderful little magic button that says, called the algorithm. Now, I appreciate I've just given you the back of the envelope version of this. The bullish opportunities, sprinkling the money management that I like to use. A little bit of extra secret sauce, which we just don't have time to cover today. At the click of a button, I can say, would this have worked if I just did this and nothing else over the last 20 years? Oops, a daisy. Pressed the wrong button there, bear with me. If I just did this over the last 20 years, 20 years, there's the date. If I just bought the dip and sold the rally and didn't think about the Fed, non-farms, CCI, PPI, RSI, none of the things that we could think about. If I just bought the dip and sold the rally, what we're looking at is the equity curve over the last 20 years. Don't worry about the numbers, don't worry about the specifics, but what we can see is it should be a nice steady, again, it looks like a trending chart. If I just bought the dip and sold the rallies, as I've described to you, without thinking, without deviation, without hesitation, so that I've got the repetition, this is what a positive expectancy strategy looks like. I'm expecting a positive outcome. Great. So not only have I just explained some rules that I like to use, I'm now proving like it works. Here's the evidence. That is what I'm doing. I'm not doing anything different, but I've also validated it. Say, okay, let's look back over the last 20 years. Here's what I would have won. That's great, great. So if I continue to do that over the next 6, 8, 12 months, it's unlikely to change because the trend has, or this footprint, this philosophy has been working for 20 years. And to be fair, you can go back 50, 80, go back 100 years, you can go back and look at as much data as you've got access to. But what I'm able to do is validate the strategy on the market, in this case, the market being the S&P 500. I think that's pretty useful. So this is my benchmark. What I'm going to do next is I'm now going to trade the shit out of this. That's it. That's the hard part, is doing it every day. The opposite would be selling the rallies in a downtrend. There's 200, there's the 50. So sell the rallies in the downtrend. Sell big rally there, get shorts, short the shit out of that bit and make the money off the sell-offs. Guess what's happening? Post-news. NFPs are just out, NFP. Rally in a downtrend comes up to the, in this case, just shy of the 20-period moving average. What's going on there? It's selling off post-news. Who would have thought that the market would have gone down? There's a high expectation that the trend will continue, regardless of whatever's going on with the news, the world, the fundamentals, the Fed, Elon tweeting, picking his nose, whatever he's doing these days. There should be an expectation that the trend is your friend until the bend at the end. You know, we've not got a bend at the end and we're not over. Now, I don't know how long the trend's going to last, but you're going to lose a little bit of money at the top and you're going to lose a little bit of money at the bottom. So there's a couple of trades on the algo. You know, they weren't that great. There's a couple of losing trades here. I'm just highlighting the ones that lost money. So you're going to lose a little bit of money on the ones that didn't work out. There's a little bit of transition where it just meanders sideways, and then we're into that bear trend. Same thing's going to happen. You're never going to capture profitable at the top. You're never going to get the bit at the bottom. Similarly, you're not going to capture the first part of the direction change. We've got it. Now we're selling rallies, so we start to participate here. And again, we're looking to sell rallies in a downtrend. Again, how long this lasts, I haven't got a clue. I'm not going to bullshit you. I don't know how long this is going to last. All I know that on average, I expect it to continue to the downside until there's a new direction has confirmed. That's all I'm looking to, is profit from the opportunities. So as I mentioned, the next part is to trade it. So I'm going to apply this on the S&P. We just happen to be looking at futures. You can trade it on SPY. But then also what I want to do is, again, coming back to what I said earlier, I don't want to be flicking through chart after chart. I don't want to bounce around from chart to chart because I don't know which bit of the move is going to be the one that makes me some money. I don't know if I didn't know with hindsight. Sorry, I only know with hindsight that was a profitable part of the move. Does that make sense? I only know with hindsight that was a profitable part of the move. I only know with hindsight that was a very painful 20% retracement that I had to sit through. I only know that with hindsight. What I'm trying to illustrate is I don't know what's going to happen tomorrow. I just know that I expect on average to be able to profit from the trending parts of the movement. So what that means is, because I don't know which bits is going to work out, I didn't know that one was going to lose some money, for example. Again, some red arrows and would have lost somebody on that entry criteria there. And so these little triangles and arrows for they're highlighting the algorithm, the mechanical application of the strategy that I've just described on the bearish side here. I don't know which one's going to work out. I don't know. I want to emphasize it as much as possible. I don't have a crystal ball, but what the algorithm is saying is I've got an average expectation of a positive outcome. And that's a fancy way of saying is I expect to make money on average over multiple occurrences. So because of that, I've got to take every trade that sets up with the frequency that it sets up. So another part, so we've got a strategy. The chart is intentionally blank. So we've got a strategy that we've proven that works. I've got at least one market, the S&P 500, that it works on. That's my benchmark. Now, I don't only want to trade that. You are not going to make lasting wealth trading one at a time. Another trap that new traders fall into is trading one at a time. One and done. And to be fair, that has its place. While you're learning, you might do that. But you've got a strategy, you've got a system. I've just given it to you. So there's nothing else to learn. So the next part is to trade a portfolio. Portfolio. There we go. So I want to trade a portfolio. And I'm going to start, and typically I start all my traders off with 25 stocks, at least 25, because that is the portfolio. Not just any 25, not 25 random stocks. I can plug the algorithm into all of these stocks, and I can ask myself, would it have made money on this stock, on this opportunity? So if on average over the last 20 years that the stock's been around, or at least 10 years, because again, I appreciate not every stock's been around for 20 years, but at least 10 years, I'm looking to see that the stock behaves favorably for the way that I want to trade, which is I want to swing trade. I want to profit from upward movements and downward movements in bull markets, in bear markets, and I want to be able to do it in 20 to 30 minutes a day. So I've got to trade a small number of stocks consistently that have historically suggested that they behave in a way that is favorable for the strategy that I've just explained to you. The logic being is that it will continue to be favorable for the next 12 months. So it's worked for the last 20 or 10 years. And the logic is it will continue to work for the next 12 months, the next 1 year. There's a high expectation of a positive expectancy. Again, I don't know which one's going to work, so I've got to take them all without deviation, without hesitation, so that I've got the repetition. So there's some bullish trade right there, and there's some bearish trade right there. So why, and how do I know that without looking at the charts? Well, let me tell you. Where's my number 2? There we go. So these boxes here, this is the trend column. So this tells me which way the 50 and the 200 period moving average, the relationship, are they bullish? Well, those stocks are all bullish. And that means that the rest of these stocks, they're bearish. So we've got a bear market. We've not only got the S&P 500 in a bear trend, but we've got these individual stocks in a downward movement. So there's still going to be some small number of bullish opportunities, but we do have an imbalance at the moment because we are in a bear market. So what happens is I've got some stocks that are bullish, some stocks, or in fairness, most of those 25 stocks are bearish, and that's okay. So I can buy the dips on the bullish stocks and sell the rallies on the bearish stocks. And I need to take every trade with the frequency that it sets up so that I've got the consistency that I expect, so that I can emulate. You're never going to get exact. I'm not going to blow wind in anyone's sails. It's not going to be exact, and everyone's going to have a slightly different entry point. That's fine. But I want to be able to emulate the historical performance. So I can plug the algo into all of these stocks and say, did this one, and would this one, has this one, how many ways can we say the same thing, Phil? Just carry on. Has this, over the last 10 years or 20 years, has it worked out? The likelihood of it carrying on for the next 12 months has a high expectation. It's unlikely to break down. Now, it may be that we transition from bull to bear and we do see an underperforming period on 1 or 2 or maybe 3 stocks, but we've got 25 that are high performers. So all of these top 25 stocks for me are ones that are better than the benchmark, better than the benchmark. The benchmark being the S&P. I've got doctor's handwriting. You'll have to bear with me. There we go. Better than the benchmark, which is the S&P. So, but the idea being is if one of them's crap, if one of them sets up, if one of them loses money, or 2 of them, or 3 of them, or 4 of them, or even 5 of them, or even 6 of them, I've got 20 or 19 or 18 that are absolutely beasting the market. That's the logic. There's going to be good times, going to be bad times, but on average, I've got good times. Does that make sense? Is everyone happy with the logic behind not just having a strategy, but deploying it on a portfolio so that you can have an average expectation? And if you've got 1 donkey or 3 or 4 donkeys for that matter, you've got another 20 that are absolute racehorses. Absolute racehorses. That's what we're looking for. So you don't want to trade one at a time, because the chances are when the strategy has a shitty period of performance, and they all do, all of them have bad performance because the market conditions not right all the time, every time on everything. Fallacy. All you need to do is right on average, and you need to be able to cope with the periods of time that are not great. So the last part that allows me to do this in a capital efficient way. Absolutely, Perry. It's wonderful. I've converted you from Dow theory, haven't I? Or Elliott wave theory, wasn't it? I've converted an Elliottist over to this poor farm boy's approach to trading the markets. Absolutely right, Perry. So the last part to making this work is I use stock options as an alternative to trading stock. Now, in the time that we've got left, is a little bit beyond, what we've got here. Don't be scared off by them. If options are brand new or stock options are brand new for you, the best way of thinking about them right now is they are like a deposit. And you know how deposits work. If you went to the car dealership and you see a car that you like, you're not going to buy it outright, but maybe you like that particular one. It's got the right colors, the right features, all the things that you're looking for. You're going to leave a 10% deposit and you've reserved it. Now, the good news is we can do the same thing in the markets. I'm not going to buy 100 shares. I'm going to reserve 100 shares. I'm going to leave a deposit. That's called an option. And before you roll your eyes at me and comment, I appreciate that all the people who know what options are. This isn't technically accurate. This is just a metaphor for the new people who are new to options. But instead of buying 100 shares, I'm waving my arms around. I just realized the camera's not on. Instead of buying 100 shares, I'm going to reserve 100 shares. That's called an option. A deposit, an option. It's similar principles. Now, the good news is if the stock increases in value and the stock does what we want it to do, it goes up and we're making money, the value of the option goes up as well. And when it goes up sufficiently enough at a predetermined level, then I will sell that back to the market. I'm not holding it forever. I don't want to take delivery of the stock, but it means that I don't have to put up the stock margin or the full cash requirement for 100 shares. I can trade the equivalent or the deposit for a fraction. And that means that I can have this portfolio of 25 stocks with small accounts. The capital requirements are minimal. And if you've got a big account and you're more confident, then you can expand your universe to obviously increase position size. You can look at the top 50. You can look at the top 100. You could look at 75. You look at the top 100 stocks. I've got quite a large list of positions. I'm an active trader and I'm okay with that. But you want to start somewhere. Start with 25 and then build up to 100, then build up to 75. And if you want to, you can go 100 stocks. You just want to emphasize, you don't have to. You can stick with the top 25 and increase position size. That's the other way of doing it. So this is the portfolio approach that I use, which I refer to as production line trading. It's good for big accounts, small accounts, somewhere in the middle accounts. You can trade it capital efficient. So you can, again, I'm going to say leverage, but I don't mean it in the way that I'm doing it in a crazy way, meaning that I'm not leveraging my money. I'm using leverage as a discount, as opposed to a multiplier. If you get that, you'll know what I mean. But again, I'm just running out of time, so I'll just skip past the explanation. But using a stock option gives us leverage in a discounted way. So again, I'm not using money that I don't have. I'm just being efficient with the money that I do have. So with that said, let's go and take a look and spend a few minutes looking at what's going on. Now, you notice that the markets, I suppose the best way of describing it is shitting the bed post non-farm payrolls. We have had a news report out about an hour and 15 minutes ago now. But the bullish trades, interestingly, oops, pressed the wrong button, bear with me. The bullish trades are bulling. They're going up. How do you know that, Phil? Because I can see, without looking, we've got some... they're going up. We've got up. The bullish trades are up a couple of dollars, a couple of percentage points. That's fine. That's great news. The bearish trades on a lovely day like today are the bearish trades are bearing, as I like to say. So all of the stocks that are supposed to be going up, with the exception of one, because SQM's not, are going up, but all the stocks that are bearish are going down. So these are all sorted bullish and bearish. And let's go and just quickly review them in the last portion of today's show. So we're looking at oops, pressing the wrong buttons again. Bear with me. Let's try that again. So CVX is in an uptrend. Prices above all three moving averages. Oops, today's pressing the wrong button now. All three moving averages. We've got multiple opportunities. This is another benefit. I think I mentioned this last week in the open house, but this is just by moving to options as an alternative to stock, we're going to outperform the algo. The algo has lost once, twice, and this is the third trade that's on. Now, the algo is using stock to create the performance reports, but just by moving to an option and using the full price to premium means you've got this built-in risk control without the need to use a stop loss. And that means that you might take the first trade, you're not going to take the second, you're not going to take the third. You've not been stopped out twice. And as the price continues to resume, because maybe you've mistimed the entry, you're going to outperform the algo every time. Even if it's just a case of you're not losing as much as what the algo did. So that equity curve I was showing you, it should smooth out and get steeper just by shifting from stock to stock options. So another benefits, if you're not already convinced to use them, then there's another reason for it. So CVX got a brand new trade looking for price to move higher. The algo technically has fired off. That's what these little scritches and scratches are. And we've got a target. Where's the target? Got a target up at $215. Again, the software that I've coded, or had coded rather, I am no programmer, but it just helps you with the assistance. So you've got the entries, you've got the targets. So $160 up to 215. That looks like a great risk reward ratio as far as I'm concerned. Looking good, looking good. Unsurprisingly, the energy sector is mostly bullish. So we've got price moving higher on COP, virtually the same trade. LNG is also moving higher, another energy sector stock. I think LNG, is this liquid natural gas, is that right? LNG, that's what it stands for, liquid natural gas. Yeah, well done, Phil. You tap yourself on the back. So we've got price moving favorably again. We've got the algo's fired off a new trade. And it's again pushing higher. Where's the target on this one? Targets. So from 161, looking for a target of $230, and no reason to not believe that it won't get there. The energy sector is benefiting at the moment. There's going to be a little bit of a shake-up. You may have seen some of the news about it. So the energy sector is benefiting from some less than desirable news in the oil production sector, which is obviously having a positive effect on the stocks. SQM is selling off today, despite the bullish movement. So we've got this retracement mode in the context of what we were talking about earlier. Prices below are 20 and 50 period moving average. So this is a dip in the context of an uptrend. I have spotted some additional analysis to say that we have this rising channel. That looks like it's broken for the moment. We're still above the 200 period moving average, so still in bullish territory. But for the moment, SQM does look like it's selling off. If you like counter trend trades, this might be a good example. Personally, I don't like them. It doesn't sit well with my personality, but this might be a good counter trend opportunity. Jefferies Financial, we mentioned this last week as a sellable rally. Guess what it's doing? It's rally. There we go. We've got sell-off. We've got the rally. There's our opportunity right there. If you weren't already looking for one, we've got a brand new live one on Jefferies Financial. Brand new. Let me skip through these quite quickly. ABC. So we've just got a brand new crossover. We're only 9 days into the crossover. How do you know that, Phil? On this column here, it's actually counting the days since the crossover. So on ABC, row number 30, if you're watching on Zoom, you can pinch the screen and zoom in, but saying that it's only been 9 days in trend. So I don't need to worry about that for the moment. Amazon is firmly in a downtrend. You can see the algo trade right there. We've also got some short-term trades on this. I apply this on the 60-minute charts. Where's my Amazon? So I've got an Amazon trade. I've got a couple of Amazon trades in on this one. On the 60-minute chart, it was a little bit early, but looks like it's catching up, and we should be seeing that turn back into another profitable situation. Anyway, back to the daily charts. Again, daily charts is already short and moving lower quite nicely. I'm looking for a target down $100 on this initially, and the algo is suggesting a move down to $62. That's looking good for me. I'll have a piece of that. Thank you very much. HPQ, I think that's in a consolidation, as I recall. Oh, my apologies. I've got it confused with a different chart. We've got the bear trend. All the tickers, they all blend into one. Brand new trade algo on this one. It's fine off. These vertical lines, I've placed these manually. We've got a new algo trade, $26. I don't see any reason for it to not to get down to around about $15 on this. ISRG. Again, algo's already on. Brand new entries. It kisses the 20-period moving average. There was no trade management to do, so the original entry at $210 is still active. Where could it get to? Again, the algo's working it out for me. Down to $105. So that looks very good indeed. I like a bit of that. NXPI, another semiconductor. Is it semiconductor? I think it is. Yeah, there we go. Semiconductors. Again, brand new algo entries just fired off. $152. Where could it get to? 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 Oh, it doesn't seem like it's. Oh, I know. It's only fired off today, so the line plottings will only go on tomorrow, ready for Monday. So what have we got? $252. Quick mental calculation. I'm thinking about $90 as a ballpark. Just mentally calculating this. Again, when you know the system, you know the system. RNG grinding lower. Again, it's still bearish, but we've had a. Let me just zoom in because it's still moving lower. So again, new algo entries just fired off there. Should see a move down to let's get the widget things. I'll have to get onto the program on that one. We've got a little bit of a negative number. We'll have to fix that. Spotted a glitch. There we go. It's not perfect, but there we go. What can we do? What I expect, again, just mentally thinking about it, probably about $25, $26 seems to be fairly reasonable to expect on RNG. Let's just get that out. SIG. Again, just grinding sideways. We've got 1, 2 crosses in our average price. One of the things that we like to do, again, from a manual point of view, is recognize, when we've got a consolidation, I think visually we've got a consolidation, multiple touches of the lows, multiple touches of the highs. Mechanically, when we've got 3 crosses in the average price, then I'll start saying, hey, this is a consolidation. We're not disputing that. Again, visually it's already there. If you don't recognize, we've got that mechanical assessment, but nonetheless the algo is not looking for these, so this is an optional extra that if you see it, it's great, and if you don't see it, that's fine as well. Apple is pushing lower. Again, talking about this last few weeks, I'm seeing this as a range reversal. Let me just zoom out so you can see where I've marked it. So we've got this upper boundary, we've got this lower boundary, we've got this consolidation, multiple crossing the average price that I just mentioned. Again, we've commented on the range reversal from the upper boundary, and again, targeting down at $130. Again, this is another one that I also trade on the lower time frames. Again, Apple, we've got multiple trade choices on the bottom left chart here, the 60-minute charts. Providing, again, some good opportunities if you want to go a little bit faster. So this is one of the stocks that I like to, again, speed up, go a little bit faster. The production line on that has a payout of cycle of around 7 to 10 days on average, but it could be 1 to 2 weeks and possibly up to 3 weeks from time to time. What are we up to? AMAT. So we've got a lovely downtrend on AMAT. Again, I'm already in on this one. Again, already outperforming the algo. We've had multiple entries on the algo. I'm looking for a move down at about $65. This little green box here, I've manually placed this. Again, the algo has technically fired off another trade right here, but nonetheless, it's pushing nicely lower. AMD, one of my favorites, also on my short-term trading choices. Again, the swing trade is pushing lower because we've got this descending channel, multiple cross of the average price. I've defined this as a downward sloping consolidation. So I'm looking for a move down around about, down at $60, but the range low, that should get down to, $50, $55 somewhere around there is where I would aim for. And then using the range low. BBWI is pushing lower, going brand new setup just a few weeks ago, coming back to retest the entry and again pushing lower today. BFH. Lovely downtrend carrying on its downward incline. Again, target down. Again, just eyeballing it very quickly, about $25. Not far to go for it now. Baidu, I've got to admit, has been frustrating the crap out. I mean, my entry over here in May, again, I've got plenty of time on my option, but if I can get that out at break even, I'll be happy with that. Again, there's new algo entries have fired off. Marvell. Again, new entry firing off today. The previous entries there. Again, I would imagine a target down at $30, just back of the envelope, and get very easily. SLG had a lovely breakout trade. We commented on this several months ago now in real time. We've got a new algo entry for trading the trend, and again, that is pushing lower and trending nicely. SPY, we've already looked at the market, but it is firmly in a downtrend. We looked at it on the futures, and this is the ETF of the same thing. Got multiple trade choices. All the way down. X going to give it to you. US Steel, again, new algo entry just a few days ago. That's moving lower. All States, ALL, Again, in a consolidation, nothing to do, multiple crossing the average price, draw a big box around the whole thing and wait for it to break out. That's all we need to do there. And that's where we're at, folks. That's the top 25, all pushing lower, all moving very nicely. In most cases, there's very little for me to do today other than to wait for the moves to carry on. And that's all I'm looking for. To see price moving on. So we've got non-farm payrolls. Let's just take a look at the lower timeframes again. We've got non-farm payrolls, this big knee-jerk reaction here. Again, you see the same thing here, you know, price coming back into the, this is the 2-minute charts, the 20-period moving average, pushing lower. Again, the algo is technically fired off from the 2-minute charts, even post non-farm payrolls. So that's pushing lower quite nicely. And it's looking like we're going to, I wouldn't suggest Black Friday for a moment, but I am certainly not disappointed in any way, shape or form. Certainly not disappointed at all. Sorry, catching up on your comments. Yeah, whoopsie daisy. It's a very British thing. Whoopsie daisy. Notting Hill, Julie Roberts, Hugh Grant. Yeah. Talking of Hugh Grant, Glenn, I watched Hugh Grant in The Gentleman. If you've not seen it, thoroughly. That's my favorite film in a long, long, long time. So yeah, very much enjoyed that. So the market's been a proper naughty boy at the moment. It's selling off like we are heading for a black finish. We're down 2% on the markets. Very nice indeed. Again, not complaining about this whatsoever. So again, daily swings. Again, I'm already positioned. As most of you know, I've had very little to do other than to sit and wait for the movement. It looks like we've patience is being paid out. Post non-farm payrolls. Interestingly, I think we had favorable job reports, but that's obviously been seen as negative for the economy because the inflation and interest rates and all that are not being halted. So if we'd seen worse job numbers, then that might be seen as a good thing, and for the economy that is, and we probably would have seen the market rally. So just because we're seeing a favorable report doesn't always mean it's going to be favorable for the markets. So again, just highlighting why I don't try and interpret news reports. I would rather just trade price action, buy the dips, sell the rallies. I mean, it's, for me personally, it's no surprise that we're seeing the downward movement in most cases. What is always going to be a surprise, as I wag my finger in the air to try and emphasize the point, is the thing that will always be a surprise is news typically speeds up what was already happening. So in most cases, the trends were down. And the fact that we've had some news out, it's speeding up what was already happening. So the speed of movement is going to be the thing that will always remain a surprise for me. But the fact that it's moving down in context with the trend, not so much a surprise, if I'm going to be honest, because this is what we do. We're looking to try and capture the ebbs and flows of the institutional money. And that's what creates these trends. We are in a downtrend. Selling rallies. We're in a bear market. We're in a bear economy. We're in a recession. It's going to get perhaps a little bit worse before it gets better, as evidenced by we're not a million miles away from a new low for the year. I would imagine that we will see that going into next week if we don't see it today with hopefully a Black Friday. Again, for me personally, I would love to see a Black Friday. Again, I'm very well positioned to the bear side. I've still got bullish trades. Again, I could quite happily write those off and not care a jot about the bullish side of the portfolio, because the bearish side, I'm probably about 80-20 bearish, 80% bearish, 20% bullish. So these moves are really favorable for me as far as I'm concerned. Meaning if you're brand new to the markets, profiting from the downward movement is what I mean by that. So that's great. Selling short or buying puts is what we've done here. So yeah, very happy with this outcome today. Anyway, I think that's where we're at, folks. Any final questions, comments, observations? Let me just find my handy dandy slide. Any final questions, comments, observations? If you want to hop on the horn and have a little chat, let me know and I'll be happy to release the mic. If not, we can move on, carry on with the rest of our Friday. While we're doing that, if there are any big takeaways, what was your biggest takeaway today, folks? Any ahas, anything you want to share? Again, similarly, if you want to type it out or if you'd like to hop on, let me know that you want the mic off. I'll happily share that with you. This goes for anyone that's watching here or on the YouTubes. If you're watching this on YouTube, pop a chat in the comments area below the video. As soon as I see it, I will give a response. I may not be able to reply immediately on Zoom. Another reason to come to the Zoom party that we've got here. How do I get on the nightly calls? I don't do nightly calls, Glenn. I do group calls for our insiders, which you are, on Monday and Wednesday. Monday at 9 a.m., Tuesday at 10. And then we've obviously got this open house on the Friday. So the link is in the members area, in the over the shoulder area, along with all the replays for the Monday and the Wednesday insiders group calls. Perfect. Fabulous. Randall saying the portfolio style trading is it's gonna, I wouldn't say it's my savior. I think that's a little bit crass to say. But yeah, it's certainly, for me personally, again, I stumbled across a portfolio style of trading early on in my career. Now, back then, back in the day, and I think 2001, 2002 qualifies as being back in the day. But the way that I used to apply a portfolio approach was I have always traded multiple strategies. And it's not, I never thought that people didn't do it. Just because I can't describe it, but yeah, the alternative can be a little bit harsh. Yeah. So I've always tried to put a portfolio in one way or the other. In this case, portfolio of strategies. These days, I combine a portfolio of strategies with a portfolio of markets and instruments. I'll trade stocks with options. We've got futures. We've got different time frames. Same strategy applying to different time frames. We've got similar strategy applied to different markets. It works on futures, forex. It works on ETFs. I'm pretty agnostic. I'm going to gag him. It also works and back tests well on crypto, but don't tell anyone I told you that. But yeah, if you think about it, if you were trading one thing at a time, and the one thing that you're trading is just the wrong side of non-farm payrolls, imagine what your day is going to be like today. You're bullish going into non-farm payrolls. Again, I'll trade through the news. I've got no issue with it. But imagine for a moment if you're on the wrong side of non-farm payrolls. You're bullish going into the news because, in fairness, the trend may be up, legitimately may be up. But what if that's the one that's going to kick you in the shins? Post non-farm payrolls. Oops, we don't like that. And that one chart that you're only looking at turns around. And that's the one that you're going to remember. So now you're thinking the stock market's crap. This is bullshit. It's all a scam. Well, no, it's just that one trade out of potentially hundreds that has either back tested or happens in the future forwards trading. It's just one out of several that, it's just the one that you're on the wrong side of. It's an on average return over multiple occurrences. So one trade out of many is inconsequential. But if you're only trading one at a time, it's going to piss you off. It really is. Anyway, as you rightly said, the alternative is very harsh. I trade a portfolio, and then it suddenly doesn't matter that one or two or three or four or even five things aren't working. Like all my bullish trades aren't working. I've got 5 or 6 bullish trades. Out of those top 25, I've got 5 of them. 5 of them are on, and they're not working. They're going sideways. They're kind of flirting around the entry. But you know what? The 20 bearish trades that I've got on, they're far outshadowing the bullish opportunities. And to be fair, I actually put a bullish hedge on. I still thought, based on the sentiments, that we would see a bullish movement up to about 4,000 on the S&P. It's my opinion. And I put a short-term hedge on. I'm happy for that not to work out because the other 20 trades that are bearish are working out nicely as we go into the weekends. So with that said, folks, I think that's it. Let's call it a day. I'm not seeing anyone that wants to hop on the phone. Thank you very much for those who have done in the past. It looks like we've got a quiet day today. One thing left to say before we hang up, and that's just say thank you. We could, I say it every week, and I just want to finish with some gratitude. We could all be doing other things with our time. We could be spending it pretending to work. We could be spending it with loved ones. We could be at the cinema. We could be enjoying a day off. But, you've decided to spend it with me here today. So thank you from the bottom of my heart for sharing your time with me. If I could request one thing from you, if you've got anything from it, the session today, just do it. Put it into action. We know it works. And my favorite slide at the moment is get after it. The markets are moving. What are you going to do to catch up with it? So get after it. So with that said, let's land the plane and let's game over. Folks, I will see you all at the same time next time. If you're in our insiders group, I'll see you on Monday. If you're in just the open houses, I'll see you next Friday. And remember, I do have a podcast. So if you'd like to, where's my little slide? There it is. So remember, you can search AntiVestor in your favorite podcast player and catch up once or twice in the week, depending on my posting schedule. We've got 10 short form podcasts to listen to. This time next week, there should be 12 or 13. So if you'd like to catch up on that, feel free to do so. Until next time, folks, have a great time. Have a wonderful weekend, and I'll see you whenever I next see you. Toodaloo Trader. Bye for now.